Looking at the monthly chart, the macro trend displays a powerful, long-term bullish structure. For the vast majority of the preceding months, our green 8-month moving average has sustained a clean position above the red 21-month moving average, confirming that macro momentum remains firmly in favor of the bulls. This structural uptrend is heavily validated by dominant buying pressure across both price and volume. On the main chart, green bullish candles heavily outnumber and dwarf the red bearish candles. Looking down at the volume bars at the bottom, we see the exact same pattern. Green buying volume consistently outperforms red selling volume, proving systematic institutional accumulation on a massive scale. The price profile on the right highlights a massive accumulation base. Price spent an extensive 8 to 9 years consolidating within a wide horizontal range between 1500 and 9500. This near-decade consolidation built up prominent high-volume peaks on the profile, representing a monumental launchpad of energy where supply was thoroughly absorbed before the markup phase. The definitive structural breakout finally occurred when the price surged above this multi-year range with a long, high-momentum green candle. To execute this setup safely, our entry point is established at approximately 10,000. This entry timing deliberately aligns with the opening of the second candle right after the breakout, confirming the validity of the move. For risk management, our stop loss is placed at around 8,900. Following our criteria, we anchor this to the low of the first candle after the breakout or the midpoint of the breakout candle. This provides the macro trade with proper structural breathing room while keeping our downside risk strictly defined at 1,100 points.
Instead of a single target, we plan a highly strategic, three-tiered scaling exit to lock in profits along the upward expansion. We will take partial exits right after extended green candles, or at stalling pin bars at 3 distinct levels. First at 40,000, second at 50,000, and a final runner exit at 70,000. Let's break down the exact mathematics from our entry to our final target. By entering at 10,000 and holding to our final exit at 70,000, our total maximum reward is a massive 60,000 points. Meanwhile, with our stop loss firmly anchored at 8,900, our total risk exposure is strictly limited to 1,100 points. When you map this out, it leaves us with an exceptional final 1 to 54.5 risk-to-reward ratio. This level of extreme mathematical asymmetry combined with a scaled take-profit plan is exactly how we maximize macro breakout setups while mitigating trailing risk.